What is up, guys? Today I'm going to be teaching you how to top and bottom tick the market using rejection blocks. So let's get straight into it. A rejection block is a wick that takes out a higher low and closes back below it. Also, instead of a higher low, you can use the term liquidity because liquidity is resting orders, and resting orders is resting at highs and lows. Um, so basically, let's look at this 4-hour example. I'll draw my own example, and then I'll show you some real examples. Um, but I'll show you what's considered a valid rejection block. So, for example, let's say if we form a 4-hour, and this is just hypothetical, but say let's go like this. New 4-hour candle opens up and goes all the way up here, takes out, because this is our key high right here. Takes out this high, but then closes back below. Like the body doesn't close above it. So the body didn't close above this high right here. That makes it a valid rejection block. And so all we do with these rejection block is that there's multiple levels that you can use. There's the 0.705. There is the zero point 0.5. I prefer the zero point 0.5 the most, just because I think that one is the most high probability of holding. But anyways, all you would do, I'm just using a rectangle here. You can use the Fibonacci tool. But once you get the closure below and you take out a significant higher low, you would mark out anything that can give you a midline or 50%. So you're getting the 0.5 of this wick right here. And then what you are expecting price to do is to basically eventually just trade into this 0.5 and then trade lower. And then usually that is the high of that candle. Works best on the high time frame. So let's go to some real examples. I prefer this on the daily the most, but it works on low time frames. It is a lower probability thing to happen, so you can set your limit orders there. I prefer to see a reaction off there and then add confluences to it, a part of my model. If you want to learn my full model, you can message it in the comment section, and I will send you a link to it. But let's go into the daily time frame real quick and show some real examples of it happening. Okay. I don't know why the chart is like this. Okay. Right here. So we take out this low right here, this daily low. This candle didn't have a wick, but we took out this daily low, so we can draw out the rejection block because this took out a low and closed back above it. So as you can see, the 0.5 is right there, and the next day comes into this and taps this perfectly to the 0.5. This is how powerful this can be. Like, as you see, let's see if we made equal lows right here. We also did take out this low and close back above it. So the more liquidity that we take out and close back above it, the higher probability that's going to be, especially on the daily time frame. So as you can see, we could scale down back to the 1 minute to find this to show how precise this can be. That's why I like using the 0.5. There's more levels. You can use the 0.75, 705, 0.25, but I just prefer to use the 0.5 only. So it's going to be hard to scroll that far. Let's just go to another. Let's see if we can find some 4-hour examples. We definitely can. Any recent ones? How about this one? Didn't hit really any significant levels, but we did tap into the rejection block, and just barely, because this candle right here that I marked out took out this low right here and closed back above it. Let's see another example. Let's see if I can find any good ones. Again, like these setups don't happen. They happen pretty often. Let's go to the hourly to maybe find some better examples here. Okay, so All we are looking for is a wick that takes out liquidity and closes back above or below. Let's see. This wick. Not really any good examples on the hourly that I could see from here. Let's see this. Is this? Yeah, right here. So here's another one. Super small, but this was in consolidation. Let's zoom in right here. So let's take out this box real fast and examine this one. So this candle right here, the 3 o'clock candle, takes out these highs right here. So let's just mark these equal highs right here. We have 2 equal wicks. These 2 candles right here takes out these highs. Didn't quite take out these highs, but took out these equal highs right here. So this is a valid rejection block. Again, mark out 50% with a box. And as you can see, this held not perfectly, but let's see how many points it went above. Just barely. Let's get to see how many points this is. So from the 0.5, if we limited this, 2.5 points off from the top. So that's, some people use 5-point stops. I like to see a reaction out of here. If we do scale down to the lower time frame, we probably see inversions, break of structures, change in the state, more confluences inside here. But once you see that rejection block get held, it's more likely that we are going to see a big, usually after these rejection blocks, we see a quick move to the downside or upside. But what I love about these is that you could see super precise levels where price may react. Like if you see one of these, it's not guaranteed. That's why I like to combine confluences following it, just because that's like my first signal that we might be reversing here or see a big move, because once these do hold, there's usually a big move, as you can see, all the way down there like that. Hopefully you guys are getting the hang of it. I could go through one more example. I could try to find like a 5-minute example. Again, like higher time frame is a lot better for these. Like these are everywhere on low time frames. They do occasionally hold, but focus on daily ones to use for setups that you will find. Like it's just additional confluences. Like that's giving you the A++ when you get the daily or 4-hour or hourly. But these don't always hold. Just key to know. Just yeah, keep that in mind. Let's try to find a 5-minute example. Let's see. This might have been the 0.705. This candle right here, where my cursor is, takes out this high right here. So this would be a valid rejection block. We may have respected the 0.705. Yeah, so again, here's one of our another levels is the 0.705. As you can see, this one held it to the tick. So this is a 5-minute time frame. So it works on every time frame. Just the higher the time frame, the higher probability that it's going to hold. So as you can see, we take out this high right here, wick back below it, get a closure, wait for the next candle to tap one of our key levels. In this case, it was the 0.705 that ended up holding, and we end up pushing back lower. So that's all I got for rejection blocks. So in conclusion, a rejection block is a wick that takes out liquidity, high or low, and then closes back above or below, depending on whether it's a bullish example or a bearish example. The bearish examples will always be at the high because it's taking out the high, and then you would limit the order there to sell, and then the buy orders would always be the bottom wick. The bullish examples would always be the bottom wick because it takes out a low. You're expecting a reaction off one of the levels of the fib. So key takeaways, 0.5 is my biggest takeaway. 0.705 is good too, but I would just stick with the 0.5 in the high time frame because that's what's going to work best. it's great to add to any model. I think it works great. You don't have to be limiting it with 5-point stops, which many people do, because as high RR but low win rate, I like to combine it with my lower RR and then higher win rate strategy. Just an extra confidence to add. But that is all I got for rejection blocks. Hope that made sense. If you want me to make another part on it to get more in depth, I can drop a comment below. Yeah, that's it.